On Trading Nation today, we are pleased to be joined by Bob Dahl. He is Chief Equity Strategist and Senior Portfolio Manager at Nuveen Asset Management. All right, Bob, you are a little cautious about stocks near term. Can you dive a little deeper into that? How worried are you? What would be the catalyst, and what kind of declines might we see?
So my view, Brian, is that there's not a lot of downside. For me to see sustained, significant downside, I need to see a big problem with earnings, and I don't see that. It's more about the nuance. Look, we're up a lot, first because we stopped worrying about a recession and about deflation a year ago, and then we started getting better economic news, which accelerated in the back part of the fourth quarter into the new year. And then, of course, there was some more added hope on fiscal policy growth initiatives from the Trump administration. While the economy is good, it's not great, and the question marks around can we execute strategy, all of that says, we've come a long way in a short time. Maybe we need to just take a rest. And a rest could be a little pullback. It could be just sidewise, too.
So is flat the new down then? I mean, if we're not going up, is that kind of the new worry?
Well, flat is a sweet down, I guess I'd say. Markets we know don't only go up and go sideways. They also go down. I just think there's a lot of latent buying power and cash on the sidelines, kind of waiting for a pullback that if we get one, it's probably not that long and not that deep.
Yeah, and what would be, though, you mentioned some of the Trump policies here. Well, what else is it? We've got a lot of stuff on Thursday, ratcheting up tension with Syria, some strong words about North Korea. I'm shocked a little bit, Bob, that the market has held up so well.
I wouldn't disagree with that observation, Brian. We've thrown a lot at this. I'll add to your little list. The ISM wasn't great compared to expectations. Paul Ryan came out yesterday and said, not so sure about how united the Republicans are on tax reform, and a list of things. And then inside the market, remember, the market was up in the first quarter, but it was big that led small. It was growth that led value. It was defensive that led to cyclicals. That isn't where we were last year, nor is it a sign that we're going straight up. It's just a little bit of a warning sign.
Yeah, and it's it's hard to know, Bob, how much of this market run, up 15% or so since the election, is just because it's since the election. You say, well, it's Trump policies, not taking anything away from Trump or the GOP, but the market was in a 6-year uptrend and kind of took a year off for the campaign. How much of a resumption of this is just, hey, the economy's better and earnings are probably going to be better, and that anything else we get from D.C., tax reform, whatever, might just be a cherry on top of an already moving up market. Is there any truth to that?
I think there's a lot of truth to that. I've without any science, taken a guess that it's 2/3, 1/3. 2/3 related to the economy and earnings, and 1/3 related to hope about pro-growth policies.
Bob Dahl, Nuveen. Bob, we are watching these markets that just seem to hold up through anything and everything, and we appreciate your insight as always, Bob. Thank you.
All the best.
All right, all the best to you as well, and all the best to you, folks. Thanks for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.